Hi, this is Vijay Bambani, and today I'm going to talk to you about something very interesting in the market. The idea is to discuss whether there is a right time or a time better than the other times to get conned by the markets. Yes, you heard me right. I'm warning you about how not to get conned in the markets. In my other video, I talked about how the first and the last 3 minutes of trade are dominated by the BTST and the STBT sellers, which is the buy today, sell tomorrow, and sell today, buy tomorrow. Is this the only time when market forces try to influence the price, or are there other times as well? This is what I'm going to discuss with you over the next few minutes. Have you actually noticed how the research industry, the mainstream media, and even on social media, you are getting a particular type of recommendations in slotted periods of the calendar month? If yes, why does this happen? If no, I will elaborate why and what. What I have observed in the last couple of decades that I have been in the market is that the riskiest investments are actually recommended in the first few days of the calendar month. If you've already guessed it, you know what I'm talking about, but for those who haven't, it's your payday. This is when the salary gets credited to your bank account, and therefore you have ample amount of money sloshing around in your bank account to take risks with. The broking industry, the research industry, and the media knows it, which is why the highly risky trades are recommended in the first few days of the month. As the month progresses and you've used up a substantial amount of your paycheck towards your survival expenses, school fees of your children, rents, etc., you come to deliverable medium to long-term investments. And towards the fag end of the month, when you have very little money left and you're postponing your expenses to the next month, you will get extremely long-term investment ideas and mutual fund and fixed income ideas, because that's when there is the least amount of money which you can be adventurous with. Let's look at a slightly bigger picture. Are there other time frames where you need to be guarded about the kind of information that is being fed into your mind? At the end of every calendar quarter, the mutual funds are interested in boosting their NAVs. So there is cross buying. One mutual fund will buy the holdings that are held by another mutual fund, so that a reciprocal arrangement is often made by the benefiting fund. This way, the entire mutual fund industry can prop up their NAV. And as long as the NAV is rising, there are higher inflows either by way of one-time inflows or by SIPs or systematic investment plans. Now, regulations in India require that at the end of every calendar quarter, the mutual funds disclose their NAV in one regional newspaper and one national newspaper. At that point in time, there is a rush for boasting rights. My NAV has beaten the Nifty 50 or the BSE Sensex by so many basis points, or my NAV has risen higher than the average other mutual funds in the business. So at the end of every calendar quarter, all other factors being constant, you should not be short selling the market, because you have the vested interest of very large players, the Indian and the foreign mutual fund industry, which is insisting that prices go up. Similarly, you have the year end, the calendar year end. Now this happens to be the financial year ends of the foreign investment institutions, or the FIIs. The foreign fund managers are keen to go home to join their families for Christmas, and more importantly, to collect their performance bonuses. And performance bonuses, as you know, would be paid out on the extent of profits booked as well as mark-to-market profits on open positions. Who would want mark-to-market positions to be in a loss? So here again, FIs are extremely bullish at the end of the year in December around Christmas time, telling you how they will come back in January and invest even more money into India because they feel long-term outlook for India is extremely bullish. They try to talk the markets up. If you are a thinking trader, which I want you to be by seeing my videos, you will know that this is again a time you should be extremely careful about what you allow to influence your trading or investment decisions. Then you have the election cycle. I have often spoken about the US presidential cycle. Every 4 years, as you know, is the US presidential election, and in this case of the year 2020, the elections are slated for 3rd of November in the US. Here you will see that the US will start to cover their economic data with gravy, and you'll have inflation falling down, you'll have employment numbers which are actually improving, corporate profitability goes up, inflation is brought down, the dollar is strengthened, and it has its own pull and push effect on the global financial markets. Similarly, we also have our local domestic elections. Here again, the data is pump primed, and then oil prices at the pump are brought down. More and more promises are made towards infrastructure, roads, water, electrification, etc., etc., and that influences those particular sectors that are being mentioned in the news media. These are all examples of what not to do. There is ample word out there in the public domain of what to do. But maybe you need to be a little careful and think as to what is being said can actually be done. Or maybe you need to be a little more guarded than that. So yes, if you actually apply your mind, there are times out there when there is a higher probability of you getting into a trade or an investment which is not exactly the best case scenario for you. I hope in the future you can take ample preventive measures to be careful out there. Before I sign off for today, I'd like to remind you to click like on this video if you're watching it on YouTube. In the comment section, do let me know what you think of this video and what else you would want me to cover in my forthcoming videos. Do not forget to spread this knowledge with your family and friends. This is Vijay Bambwani signing off for now. Do take very good care of your investments and trades. Thank you. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.